In this video, I will be breaking down 3 different ETFs that you can start investing in without any age restrictions this year to the point of making an extra $1,000 a month as passive income. And for each of them, I will be giving a rating based on a 1 to 5 star system for its diversification and exposure to stocks. Secondly, a rating of its overall ETF performance and costs. And thirdly, I will provide an overall investment rating, making it easy for you to choose the right ETF. And finally, I am going to talk about how I would invest in ETFs if I were in my early 20s and what I would do if I were in my 30s. Now, we have our first ETF and it's a game changer. You will get a piece of some of the biggest and most successful companies on the planet all in one investment. So this ETF holds shares of the top 500 most valuable companies in the United States, currently 510, with big names like Apple, Microsoft, Amazon, just to name a few. And to be honest, at the first glance, it might seem like a tech-heavy ETF, which could be concerning since we've seen tech crashes in the past, like during the dot-com bubble in, I guess, 1995. But if we take a closer look at the holdings, it will give us a better idea. As you can see here, it is very diverse, with tech making up just over 20%, healthcare around 15%, financials 14%, and over 10% in consumer technical. And in my opinion, this ETF is a winner because it holds some of the most valuable companies in the US, which have proven themselves to be strong and successful. And that's why I'm giving this ETF a 4 out of 5 stars for diversification and exposure. Now, let's talk about the performance. If you would have invested $10,000 in this ETF 10 years ago, your investment would have grown to almost $33,000 with an average annual dividend yield of 12.5% without any additional contributions, which is just impressive. And regarding the dividends, we can see a healthy growth with a payout of almost $6 per share, but I would like to see a steeper climb in dividend itself. Currently, the dividend yield is sitting around 1.58%, which is modest, so I will give the ETF a 3 out of 5 stars for performance. And when it comes to the expense ratio, anything under 0.75% is considered reasonable, but the lower the better, and this ETF has a low expense ratio of 0.04%, which means you would only pay $4 per year on a $10,000 investment, which is super cheap. However, the high price of one share around $380 may be a barrier for some investors, so considering the low expense ratio and high share price, I will give this ETF a 2 out of 5 for costs. In conclusion, this ETF with the ticker symbol VFIAX or Vanguard 500 Index Fund offers strong investment exposure to top US companies with a diversified portfolio, medium to strong performance history, and low expense ratio. And despite its high share price, it still earns a total investment rating of 3 out of 5 stars, which is just one of our 3 ETFs for today, where maybe the next one is the perfect fit for you. Now, compared to our first ETF, this one got a pretty good reputation for its high dividend yield and ability to provide investors with solid returns while also reducing risk. Let's say you are thinking of investing in a company with a high dividend yield, but you're not sure how it will perform. Well, this ETF has got you covered, as it offers access to that high dividend yield while also giving you a more diversified portfolio with shares from over 400 companies, including big names like ExxonMobil, big financial titan JP Morgan Chase, or Home Depot. And now, looking at the holdings breakdown, we can see that this ETF invests in a range of industries like finance, banking, consumer goods, healthcare, and what I really like, also even a bit of tech with almost 8%, keeping the portfolio very well diversified. Now, overall diversification and exposure is a clear 5 out of 5 for this ETF. And now we have to talk about the numbers. This ETF has an average annual return of 10.92%, and if you would have invested $10,000 10 years ago, your investment would have grown to around $28,000 without even considering the dividend payouts. And speaking of dividends, this ETF has a dividend yield of almost 3%, which is really good and almost double that of our first ETF. And if you even reinvested those dividends, you could have grown your investment to more than $28,000 by now. Now, to really rate the ETF performance, we need to take a look at the dividend growth itself. And as you can see, it hasn't been reduced even once in the past 10 years, which is really impressive because you would think that the crisis in 2020 would have caused a reduction, but it was not like that. This indicates that this specific ETF has a solid management team and financial healthy companies in the portfolio, which led to increasing dividends even after a crisis like we saw in 2020. And that being said, I can't give it a perfect 5 out of 5 because I would like to see a bigger chunk of tech in the holdings, because tech has so much growth potential in the future with artificial intelligence and Web3. So I think it would be wise to have at least 15% of the portfolio in tech, but still, overall, I will give it a solid 4 out of 5 stars for the performance. When it comes to the costs, you would have to pay $6 on a $10,000 investment, which makes the expense ratio only 0.06%, and that's a bit higher than the first ETF on our list, but still pretty darn good. Plus, The share price is around $110, which makes it easy to invest in and perfect for beginners or investors in their 20s. I will give it definitely a 4 out of 5 stars for costs. So whether you are an experienced investor or just starting out, this ETF with the ticker symbol VYM, or in short Vanguard High Dividend Yield, is a smart choice to consider. It's got a high dividend yield, a diversified portfolio, and low risk. Overall, I will give it a 4 out of 5 stars as a total investment rating. Alright, coming to our third investment option, I used to call it the stock market master, and you'll see why. What makes this investment option stand out from the first two is its diverse portfolio, because it currently holds shares of unbelievable 3,972 companies listed on the American Stock Exchange, which is almost 9 times more than the first two funds. That means it's a great choice for those who believe that smaller companies have greater price growth potential and want to minimize risk. And some of the top holdings include well-known companies like Apple, Microsoft, Tesla, and Nvidia, making it a tech-heavy but very risk-poor ETF portfolio, which is a very good combination. Basically, on a diversification scale of 1 to 5 stars, this ETF definitely deserves a 6 because it has a well-spread risk distribution, making it a safer investment compared to the previous two options. The holdings are diverse, with 20% invested in tech, almost 15% in healthcare, 14% in financials, and the rest spread out between energy, real estate, and more. But the catch here is that the dividend yield is more modest at 1.54% compared to the first two funds, and this is because of the low risk investment strategy that comes with a diverse portfolio like this. But despite that, this ETF has a solid track record of generating returns. Investing $10,000 in this ETF 10 years ago would now be worth roughly $31,000 with an annual average return of around 12%, which is pretty solid. And the dividend growth is also promising, also doubling from around 0.8 cents to almost $1.6. However, there was a decline after the 2020 crisis, which is something to keep in mind because when an ETF cuts its dividend, it typically indicates that the underlying holdings of the ETF are generating lower income, which means some companies in this ETF are facing financial difficulties. But considering 2020 was a very difficult year and crazy year, it's just a warning sign and not a red flag. Overall, I will give this ETF a 3 out of 5 stars for its performance. The expense ratio for the stock market master is currently sitting at 0.04%, which means a $4 cost per $10,000 investment, plus the price of around $100 per share makes it very easy for investors to invest in companies with much higher prices. For example, this ETF has Warren Buffett's Berkshire Hathaway in it, and just one share of that would cost around $300, which is 3 times the price of this specific ETF. Everything considered, this is a very cheap ETF with a low expense ratio, earning it a 5 out of 5 stars for costs. However, if you prioritize earning passive income through dividends, this fund might not be the best fit for you. But if you believe in a well-distributed risk, the stock market master, also known as Vanguard Total Stock Market Index Fund, or in short VTSAX, is the perfect investment vehicle for you. So those were the 3 different ETFs. I'm going to share what I would personally do if I were in my early 20s and trying to make money. For me, I would probably invest in the stock market master ETF, which was number 3 on our list, because being in your 20s probably means that you don't have a lot of money to throw out of the window, and that's why I personally would go with an ETF that is very diverse, has low risk, but still has the potential to make me a $1,000 a month in passive income. And I will show you also how in a second. But if I were in my 30s, I would definitely go with a risky investment like VFIAX because it has a higher percentage invested in tech companies where I will probably have a higher return in a shorter period of time. Now, $1,000 a month in passive income is something that you can easily achieve when starting out in your 20s. And here's how. Let's imagine we are starting out with a $10,000 initial investment, which you can ask for example, from your parents. With an investment in VTSAX, we would have an annual average return of 11%, and in just 8 years with a monthly contribution of $400, you will reach roughly $89,946 without considering the 1.54% dividend. Now, 1.54% dividend plus 11% annual average return is 13.54% in total. Basically, at first, you have to stop contributing $400 per month into your investment, and after that, 13.54% per year on a total investment value of $89,964 divided by 12, so 12 months, is $1,015 in passive income per month just by doing nothing. So hopefully this video has given you a few ideas on which ETF you could invest in to make a decent amount of money in the future. Thank you so much for watching. See you in my next video.